Hi, I'm Tyler Laundon, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, here with your Cabot Weekly Review. I am recording this on Friday, December 15th, and we are coming up on 11 o'clock a.m. Eastern Time. So, interesting week for the market. We're going to go back to the beginning of the week, talk a little bit about the inflation data. We'll get into what the Fed said and did on Wednesday, look at market reaction in the days after that, and cover some ETFs as well as some individual stocks that are looking pretty interesting right now. So back to the beginning of the week. Tuesday, November CPI came in unchanged, pretty good on a year-over-year basis. It's up 3.1%. That's the lowest since March of 2021. Wasn't really a big market reaction to that. The market was really just waiting for the Fed meeting. We get into Wednesday in the morning, PPI inflation data comes out, flat month over month. Again, kind of reinforces this disinflation story, which is generally good. Fed comes out with a statement at 2 o'clock, holds rates steady, and then at 2:30, Chair Powell starts talking. And there was a whole bunch of dovish talking points, it really was this pivot that we've been looking for and waiting for, and that's why the market has reacted so well since. So just a couple of talking points. The Fed put out their latest summary of economic projections, the SEP, which is basically a tally of what policymakers think they'll do in the upcoming years, months and years. So for 2024, that SEP now shows 75 basis points in cuts, so 3 25 basis point cuts. That's up from 50 in the last SEP, which was in September. So generally pretty good, with a Fed funds rate right now of 5.25% to 5.5%. It means that the Fed is saying, well, maybe at the end of next year we're at 4.5 to 4.75, which is pretty much the long run average. That said, I looked at market expectations for the federal funds rate this morning, and the market is projecting more cuts than the Fed is projecting. So market is saying maybe we're going to be in the 4 to 4.5% range. So we'll just have to see how that develops. There really wasn't any pushback during Powell's press conference as far as the big things. Like, he seems to be saying he thinks the economy can have a soft landing, thinks that rates are pretty restrictive right now and there's room to come down. So the market definitely liked that. We get into Thursday. Again, that story of a soft landing with rates coming down means that the path of least resistance for stocks is definitely higher. So we saw the market rally broaden, a lot more movement in risk assets and less in the Magnificent Seven, which is generally pretty good for the market, that broadening out of performance. On the flip side, just looking around this morning at some news, it is definitely worth keeping in mind how far stocks have run over the last month and a half. Goldman Sachs was out this morning just noting that SPX is nearing its most overbought level in a long time. So RSI over 70 is the indicator there. Let's go through some of the market performance over the last week. So this is going to be through yesterday's close. Of course, around 11 o'clock today on Friday, we don't have closing data. Weekly gains, S&P 500 and NASDAQ, both up more than 3% for the week. Small caps up over 7%. We saw a lot of performance in cyclicals and value stocks, outperforming relative to growth. The equal weighted S&P 500 outperformed the cap weighted index by the most this week since June of 23. S&P is now set to finish higher for a 7th straight week. That has only happened 10 times since 1990. The last time was in 2017. So in pretty good territory here. Significant movers this week, again, small caps, a lot of the lower quality, more speculative stuff, rate sensitive stocks like REITs and home builders, financials, regional banks, a lot of movement in industrials and biotech, and then energy did relatively well, helped by a rally in crude oil prices. Last but not least, yesterday morning, a little more economic data. Retail sales surprised to the upside in November, with online retail doing better than in-store. So let's move on to some other indices and then ETFs. So here we have the S&P 600 small cap index, as I said, up over 7% this week. A lot of that was on Thursday afternoon. on Wednesday afternoon right here, and then on Thursday as well. So about flat today, but a pretty significant move in small caps. And then of course, this is a chart of 10-year yield continuing to come down with a big move on Wednesday, as you would expect, based on what the Fed said. All right, we'll move into some ETFs here. So I mentioned biotech. One of the issues with biotech during much of 2023 is just there's not a lot of funding out there for the small and micro cap biotech stocks. With interest rates potentially coming down, money might be flowing a little bit more easily. So biotech had a great day on Wednesday, and there's definitely some more room for biotech to run. Similarly, the IHI, the medical devices ETF here, had a decent day, popped above its 200-day moving average line. So medical devices looking okay. Another area of growth, so cloud software. It's kind of interesting. A lot of the cloud software leaders and the big tech leaders have kind of topped out lately. But when you look at it on a ETF level, they're continuing to do pretty well. So it's a little bit of a mixed bag. Just starting to see that momentum is building here as a group, but stalling with some individual names. So that's something to keep in mind if you're looking in this space. Speaking of momentum, the Fidelity Momentum Factor ETF here, the FDMO, pretty much tells the story, continuing to run above 50. And then I talked about the equal weight S&P 500 index. So here we have the RSP, which is pretty much your best bet on that. As you can see, pretty good day on Wednesday. So it's going to be an interesting story to follow. Market weight versus cap weighted S&P 500. This basically strips out the Magnificent Seven and kind of just smooths everything out so that you don't have such an overweight for those stocks. All right, let's move on to some individual names. So Alteryx this week having a pretty decent run. There were some rumors out yesterday about potential takeover. Haven't seen anything concrete, but came onto my screen above the 200-day moving average line and looking pretty good. 3.5 billion market cap. This is AYX. Another story. So yesterday, this is a med tech name, Glaxo, GKOS, market cap of 3.8 billion. So they came out and announced the FDA approval of their iDose implant. Company also reaffirmed its sales guidance for the year, 307 to 310 million, and introduced some preliminary sales guidance for 2024, and the stock had a pretty decent reaction to that. Might be tricky for it to get up through this $80 resistance level, but again, it's a med tech name, it's moving, and there's some decent fundamental developments there. So that's Glaxo. Rivian, ticker symbol RIVN, for the few of you that don't know that, 22 billion market cap. Obviously kind of an industrial name, auto manufacturer. So Rivian has been coming up off of the $15 level and then broke through 20 yesterday. Part of that move, I think, was due to potential for lower interest rates. Company's definitely going to have to be raising money to fund its growth plan, but also it announced that AT&T is going to purchase a bunch of the company's vans, their electric vans, to add to their fleet through a pilot program. So that helped to move Rivian. And I think that this is just one of those names that was so strong and previously and is so weak now that it's off a lot of people's radar. But I think that Rivian could do pretty well in the years ahead. Just personal preference there. TopBuild, BLD is the ticker symbol, just shy of 12 billion market cap. So they were upgraded. The stock was upgraded to overweight from neutral at JP Morgan, just talking about the company's exposure to new residential building. Again, interest rates potentially coming down could help activity in the home building market pick up even more. So that's TopBuild. Moving on to Open Door, ticker symbol OPEN, market cap of 2.9 billion. Later, the company was upgraded to market perform by KBW, talking about, again, improved housing sentiment next year. This one has a little bit more exposure to multifamily, but again, kind of a nice move. It'll be interesting to see if Open can move up through 540, which is where that resistance is. All right, a retail name, Foot Locker, ticker symbol FL, market cap of 2.9 billion. Stock moved, of course, because the market moved, but also it received an upgrade from Piper Sandler, talking about how Foot Locker has been doing a better job managing its inventory, also bringing on new brands that are kind of more on trend with what consumers are looking for, and has a partnership with the NBA, which could help. OPRA, or OPRA, I don't even know how to pronounce this one, market cap of 1.16 billion, clearly was a high flyer through mid-year and then kind of tanked. But stock received an upgrade from B. Riley, talking about their potential to monetize news audience. They have a pretty significant user base. It's an internet, content play, if you didn't know that. They're also doing some work with generative AI, and there's potential for some margin expansion here. So, not saying that OPRA is going to go on another run like it did in the first half of the year, but certainly starting to move now, and it's approaching its 200-day moving average line with some interesting kind of fundamental stories out there. Last but not least, another very speculative name. This is LILM, ticker symbol LILM, market cap of about 620 million. This is one of those companies that makes very, very small planes that they can, take off and land vertically. It's kind of for like commuter plane type market. Starting to move a bit. Again, just looking at the more speculative stuff. Again, with all of these stocks, if you're going to take a stab at them, you're acting on your own. I'm just putting out some interesting names that are on my radar that I think could be of interest to you as well. But these are certainly not buy recommendations. But LILM has been on my radar for a while. It's just kind of fascinating to think about how travel could change in the next decade or two if these small scale aircraft are able to get off the ground, and what that could do. So LILM is a play on that theme. All right, guys, that is it for me. We're going to close out here, and hope you have a nice weekend, and we'll be back in touch next week. Take care.